Hey everyone, so the headline banner of the last week has been the federal government shutdown, and there have been a lot of questions about what this means for our industry, commercial real estate. In general, government shutdowns don't directly impact commercial real estate. Property operations continue, financing is still readily available even through Fannie Mae and Freddie Mac, and transactions still close. Very few of the day-to-day commercial real estate operations or transaction processes involve the federal government. The notable exception is housing and urban development, or HUD, payments, which could be impacted if the shutdown lasts more than about 30 days. That said, the closure of numerous government agencies can still cause ripples that indirectly influence the commercial real estate market. The government shutdown could weigh on economic growth. It could delay the release of important data, and it could influence business and investor decision-making. And the longer the closure lasts, the greater its impact. The last government shutdown at the end of 2018 lasted 35 days, carrying into January of 2019. That was a partial shutdown, as some agencies already had their funding approved prior to the government closure. That shutdown caused a furlough of about 380,000 government employees, and the estimated economic impact of that shutdown was $11 billion. Of that, an estimated $8 billion was deferred and was ultimately recaptured once the government went back to work. On the other hand, the 2013 shutdown only lasted 16 days, but it was a full government shutdown like we're currently experiencing. In 2013, about 850,000 federal employees were furloughed, and the economic impact of those 16 days resulted in an estimated loss of $20 billion in GDP. In the current shutdown, it's estimated that between 550,000 and 750,000 government workers will be furloughed, and it's estimated that the government shutdown could shave 15 to 20 basis points off of GDP growth per week. So depending on how long the shutdown lasts, the economic impact could be sizable. But in addition to the direct economic consequences, the closure of numerous government agencies could delay the release of key information like the employment report and inflation readings. That's information the Federal Reserve relies on when making interest rate decisions. Now, the highly anticipated rate cuts in October and December will likely still go through, but the Fed might have to make decisions without being able to consider important economic information. In addition, the employment market is already softening, and a major government furlough with potential layoffs could further weaken the employment outlook. That could ultimately weigh on retail sales, home sales, household formation, and a variety of other factors that influence commercial real estate space demand. So while a government shutdown has little direct effect on commercial real estate performance or transaction activity, it could indirectly influence the market. One of the greatest risks, given the fragile employment market, is that the shutdown could tip the economy into a recession. But much will depend on how long the shutdown lasts and whether it ultimately weighs on confidence levels enough to cause businesses and consumers to become more cautious. Nonetheless, it's worth considering that despite this additional economic headwind, household balance sheets remain sound with strong savings and relatively low debt-to-income ratios. So despite potential short-term disruptions, the long-term impact of a shutdown should be minimal. It's capturing the headlines, it's creating a lot of buzz and confusion, but at the end of the day, investors need to focus on the long game, which is why investors always need to keep their eyes on the horizon.